Good evening. We are ready for the live at 5. Here we go. Every time. Good evening. Instagram runs a little bit behind, and I always forget to make it muted before I jump in there and see. So I always have to forget. I always forget that. Then I have to go back and remember to turn off or to mute Instagram. Good evening. Good evening. It's almost 5 o'clock. We're not quite there yet. We'll be at 5 o'clock soon enough. Soon enough. We're not quite there yet. Live at 5. We're going to look at what the market did last week. And we're going to look at what are potentials we're talking about for this coming week in the market, the overall general market. Talk about some trades. Look at how we can make us some money this week. Some money. Look at how we can make us some money this week. That's what we're going to do. That's what we're after. A few dollar bills, yo. We're trying to make some dollar bills, yo. Dollar bill, y'all. It's Sunday evening. All righty. Good evening. Good evening. Those who are joining us, come in, say hello to me. Tell me who you are. Say, hey there, sis. What's going on? Say, hey there. I'm trying to make sure I can get, oh, yeah, I can. Make sure I can get to Think or Swim. And we can. Want to be able to look at the charts. Want to be able to look at our charts, see what we see there. Screen 2, we're going to allow. Who said hello in here? Miss Deborah. Miss Deborah, I missed you all week. I was like, I need Miss Deborah. Make sure that I stay on track. Always here to support. I've missed you. This is SPX. Good evening, everybody. Looking at what we had last week. We got a couple things on the agenda today. We're going to look at last week, what the market did last week. Yes, what the market did last week. And we're going to talk about some potential trades for this coming week, what kind of meetings we have coming, what earnings we have coming this week, and just so a way for us to put some strategies in place and some trades in place to potentially make us a few dollars. Okay, I've got something I'm going to share with you that came out of our Chart Your Way to 100K boot camp. That we had our first session of that yesterday. Chart Your Way to 100K boot camp was yesterday, and we had something that came out that I'm going to share that with you as we go through this too. So y'all be sure to hang out. Y'all be sure to hang out with me. Go pass the word. Tell your people that Arlissa is live and in living color, that she is here in the warm colors. Because, on my lights, you can pick warm and you can pick cold. And I feel like the light should be warm because it is cold outside. When the weather outside is frightful, it's a little chilly out there, like 53. And, I'm in Florida, so cold weather is not the business, not at all the business. Okay, let's talk about what happened last week. Now, this was our week in the market: Friday, Thursday, Wednesday, Tuesday, and Monday. Basically, last Friday, the 28th, which was the end of the year, we had this little doji candle at the top that kind of indicated some indecision. Anytime you have these little doji candles that indicate indecision, it can go either way. right? It shows a weakness. There really wasn't any more upwards going pressure, but that can indicate we're either going to go, back down, or we could potentially have gone up. Turned out that Monday or Tuesday, actually, this was the 29th of the month. And then this year actually was these 4 days, because we only have 4 days of trading. I guess this would have been the Friday, the 29th would have been this day, letting us know that we did have weakness, right? This was the last trading day of the year. People were selling off their stuff, closing out their trades, closing out the year, yada, yada. Then come Tuesday, we gap down in a little more of a doji, like we're not sure what we're doing here. Turns out we went down some more and some more. And then Thursday and Friday, you kind of have what could look a little bit like a spinning top, two candles that are basically looking almost the same. They're not exact. I do realize that, but they showed you that for these 2 days, the open and the close were about the same place, even though one was going down and one was going up. But this lets you know that there's some indecision here too. All right. Hey, Tamar, there's some indecision here as to whether we will turn and go back upwards, or will we go on down further? And that's what I asked in the graphic for my thumbnail, was, do we have some more downwards pressure, some more downwards moving, or is this just a pullback? We've been going up for so long. Could this just be a pullback? If we look at, a Fibonacci, let me see if I can find us a Fibonacci to put on here. But if we look at that, quick study is the Fibonacci here. I usually, let me see if I can find the good old fib. I don't see it on here. It might be under, let me see, it may be under, not a drawing, it may be under an indicator. Do we see something now? No, don't see Fibonacci. FIB. I know if I had my my trading view open, I could see it right off rip, but I don't see the Fibonacci. If somebody's in the chat and knows where to find the Fibonacci, then let me know. Oh, I think it might be here. Is this it? One of these lines over here is the Fibonacci. I don't use it a whole. Oh, there we go. Fibonacci time series. So if we were to go from here, oh no, I want to go upwards, not side to side. What kind of Fibonacci is that? Nope, that's not the one I wanted. I don't want the side by side Fibonacci. I want the up and down one. There we go. Okay, so I'm going to take this off because I don't want that. We don't want the side to side one. That doesn't give us what we're after. We want the one that goes up and down. There we go. Fibonacci extensions. Go from a low place up to a high point. And then, okay, come on thing. There we go. So we get to see here, what are the levels? Is this just a pullback, which we're right now in the 61.8 range, which generally says that we're here for we're here for maybe a pullback, retrace, and then some more movement. The golden level, I believe, is back here. So we've got a little more room. You can see that we can get into the 61s, turn and go on up some more, 61.8, or you go to the golden level, which is the 38.2, whoop, and then go on from there. So there's a little, looks like this, like there could be a little more downwards room, but we're at the 61.8 on the Fibonacci, and 61.8 can also indicate a turn, which is why you see a red candle on this one and a green was next. That really could be an indication that we're making the turn. But how are we going to know? Hey, Karen. Hey, Adrian. How are we going to know? Well, we're going to have to look at some stuff to find out which way it goes. This is, again, I told you, we got indecision in these two areas. Both of these doji looking things and this little hammer, this Xing hammer kind of gives you an indication that it might go back this way. But we need one more day. We need one more day to find out what's going to happen there. So that's what we're going to look at, is what's going to happen next. Well, if we look at our meetings coming up for next week, right? If we look at our meetings coming up for next week, Monday, Tuesday, Wednesday, all yellow folders, means these are like low impact and low volatility, may not have a huge impact. We've got FOMC member Bostic speaking on On Monday, consumer credit month over month is Monday at 3 o'clock. Those are both yellow folders, low volatility. Tuesday, we got trade balance, small business index, RCM tip in economic optimism, and FOMC member Barr is going to speak. All yellow folders again on Tuesday. Wednesday, wholesale inventories, crude oil inventories, which may be a little bit more than a yellow, but 10-year bond is orange. FOMC member Williams is going to speak. So first 3 days, not seeing a lot. Monday, for sure, I believe is going to be an indicator as to what happens. That's what you got to make. Sometimes when you have those indecision candles, you basically got to wait to see what happens next. You have to wait to see what happens next. Are we going to go up or down? Because this is when it's going to get interesting. Thursday and Friday. See these CPI and PPI? Inflationary things, unemployment pieces. This is where these are red folders for reasons, right? The CPI and PPI is going to let us know. Seems like we've had the discussion, like at the end of the year of 2023, when I say we, I mean the people at large, felt like because they were going to bring down interest rates, or we were told they were going to bring down interest rates in 2024, people felt like, well, the economy must be doing okay. Maybe we're not going to enter into the recession or whatever because we're going to correct, things are stable enough for them to bring the interest rates back down next year. Well, now that's kind of pushing. It was like, oh yeah, we're going to do it 3 or 4 or 5 times next year. Then it was like, okay, maybe like March we'll do it. Then the next thing you know, you started hearing is it's probably going to be in the June time frame. And then the last thing I heard or read is that it's probably going to be in Q3. Well, if we're waiting till Q3 to start reducing the rates, that really means that they're not necessarily convinced that we're ready for it in March. So where people got excited about this information at the end of the year, and we got very bullish and ran up into the 4,700s to close out 2023, now you're kind of getting some numbers like, well, it's still kind of not so, let's give it a minute. So if we start talking about reducing interest rates, not in March, but in August, it's a little different situation, right? A little different situation. So basically saying that we may or may not just continue to run bullish. But at this point, where we are is we're not bullish or bearish. We've basically entered into a neutral place. I'm trying to go grab there we go. We're kind of entered into a neutral place. We were bullish, very clearly going into the end of the year, we're bullish. And we're not bearish. So we've had a pullback, but that may be this. It could be pullback. It could be no pullback correction. It could be going down some more. Again, this indecision didn't make it real clear which one we're doing. That's why we got to just wait and see. Always, we check our technicals. We look at, our moving averages. If you're into moving averages, look at your support and resistance, your trends, follow your Fibonacci if that's something that you're into, your Ichimoku clouds, Bollinger Bands, MACDs, RSIs, LMNOPs. There's so many different things you can follow that will help you to find out whether or not things are going to be running one way or the other. And yeah, we want to be as wise as we can be with our things, right? I put this on the screen. I think I'm going to change it to a different one. I think I'm going to go and see it on Instagram. That way I can, let me see. Can you move us? Yeah, maybe not. It doesn't want to move. That doesn't want to move. It may not be the way. Let me see if I can. There we go. If I can get it better. Ooh, there we go. Earnings for next week. We're starting the year up again. So we're starting up with some earnings, right? On Monday before the open, we had CMC. We got Helen of Troy. I think Helen of Troy is a finance thing. Monday after close, we got Accolade and Jeffries. Tuesday, Acuity Brands, Tilray, TD SYNNEX, Albertsons. I didn't even know Albertsons was still open. Neogen, MSC. After close on Tuesday, AEHR, AZZ. Don't want to call that by its name. I'm sure they They knew what they were doing when they named themselves AZZ. Nobody told y'all this wasn't a good name for you. Like, well, you know what? Well, let's just change ourselves. Just make ourselves AZZ. Yeah, WD-40 is here. Price Smart is here. Price Smart is a store we used to go to and shop at when we were living in where did it? Guatemala. We went to Price Smart in Guatemala. It's almost like a Sam's and a Costco. That's where we shopped at Price Smart when we were in Guatemala. That was our English Connect, our US Connect. E2 Open is here. Saratoga Investment Corp, SGH, and Camp or Cal Amp. Wednesday, aftermarket closes, we got KB Home, Richardson Electronics. Thursday, Info Systems, NTIC. The concrete people are Thursday after closings. And then Friday, what do we see here? The banks, baby. The banks. Once the banks start coming in, which one of the things that, I won't say it's a conspiracy, but that there's been more bank issues and more bank closing than they've led us to believe. It's almost like they've raised one bank's ability to take on more, so that bank can swallow up another bank all quiet. Like, let's just do it all quiet. Don't tell the people that we've just basically swallowed. I think we've had more bank failures than they've mentioned in the news, and that's just them trying to keep us from getting nervous. So because they don't want us to get nervous, they've not told us about some of these bank failures. Albertsons is a grocery store. Yep, it is. I remember Albertsons used to be when I was growing up. It's just, I thought they had all closed. I didn't know they still had Albertsons. But yeah, I do know Albertsons is a grocery store. It used to be a very popular one. On Friday, we've got JP Morgan Chase, United Health Group, UNH, Delta showing up, Bank of America, Wells Fargo, BlackRock, the folk who are doing a lot of crypto, Citibank, BNY Mellon, and WIPRO. It's all Friday. It's going to open up. The banks really lead us into the earnings season for sure. You had 4 tickers vanish for the watch list. What do you mean, Boone Wolf? I mean, the ones I had on that page, I had to change some because they were having earnings. I think you're talking about that. Hey, Barry. I had to change some stuff I had a list of trade ideas, but I had to change it because some of them had earnings. And I don't suggest that we do earnings, that you do credit spreads when you're going to have earnings, because that's called a binary event. It can go either way. Credit spreads are something that it's good for us to have one-way direction, but you don't want like high and heavy volatility when you're doing credit spreads, unless you're sure of a direction, right? So you don't want to you can pick a put credit spread based on the information that you had previously, but then earnings can step in and be like, pow, and your put credit spread, things just change, right? Because that can go earnings can go either way. They can go either way. So I took off JP Morgan and Bank of America were both on my original list that you see on the screen. They were originally there and I had to take them off because I don't want to ever suggest that people will do trades and not remember. And I want everybody to do the due diligence, but part of my job too is to make sure that I try to make people as aware as I possibly can. So these are trade ideas for this week. If you're interested in that, we put some cash secure puts back on. Cash secure puts is a bullish trade idea. You're believing price is going to go up or at least stay up above your strike price. Wolf is 1.5 strike. Falls in the penny category. So does Peloton and QS. Clean Spark is in the crypto space, crypto support space. ANVS, Riot, Mara, Upstart, and Affirm are all here. Now, if you're doing cash secure puts, you're selecting a strike, multiplying that strike times 100. That's how much collateral you need to put on that particular trade. So on Riot, if you decide you're going to pick Riot as a 14 strike, that means you're going to be leveraging $1,400 of collateral, 14 times 100, $1,400 of collateral with the thought that the price will stay above 14 and you'll take in your premium immediately upon entry, and the trade will just run for the week. As long as the price expires above 14, you get to keep your premiums and you get your buying power released back to you. If the trade or if the stock price is below 14, then you'll be given 100 shares at the $14 price. All right. Along the bottom, you should see the ticker running, talking about the wheel strategy. Cash secure put starts the wheel. Right. We can use PeakBot. We can use PeakBot when we're dealing with the wheel strategy. Right. I think I did a video. I know I did a video a couple days ago where I said basically how do you make automatic profits. Automatic profits. I did a video on my YouTube channel about using PeakBot and how exactly does it work? How does you pick the stock, you pick your own stock. They have a watch list. You pick your stock, and then the auto bot is going to pick the strikes. It's going to pick the 30 delta on the put side for your sell leg and the 10 delta for your buy leg. And it's going to enter that trade at the optimum time, either Monday or Tuesday. It'll pick an optimum time, enter that trade for, basically it enters it as a credit spread, and then it runs through the week. You can close it when you're ready, or you can let it expire worthless. Up to you. That's all on use PeakBot, peakbot.com. Okay, automated trading. It links into Thinkorswim and to Tradier. It still connects to those. For me, I still have Thinkorswim. I don't have Tradier. I only have Thinkorswim, and it still connects to mine. So some people have had some say that theirs didn't connect anymore, but mine has stayed connected. All right. We also have some call credit spreads here. Not so many call credit spreads. We're going to look at some of these here in a minute, but ENPH, Meta's actually on both lines. It could be an iron condor. We're going to look at that one. I have Meta on my list for us to look at. Microsoft, not on my list, but it's here. NVIDIA is here. It could also be a call credit spread. And then put credit spreads, again, bullish. It's just like selling puts. Call credit spreads are bearish for sellers. SOXL, I thought I took BAC off. This should be off. Bank of America should be off here. Did I take that off? What did I do with that? I really thought I took that out. JP, maybe I changed it. Let me see. Where did I put that other? Because I really thought I changed that off. Let me remove this from the stage because I purposely. Is this it? Yeah, this is it. I'll bring it to the other screen. That way we can. That is a Alexa? Yes. It is. Okay.
That's yours.
All right, let's change over to add this to the stage. I knew I had updated this. Let me make sure we got the right thing showing here. The Amazon showed up. No, I don't want that getting bigger. I want this to get bigger. There we go. ENPH, Amazon, Meta, Microsoft, and NVIDIA all on the call credit spread side, and on the put credit spread side, SOXL, VZ, Amazon, AXP, Boeing, Visa, Meta, and NVIDIA. NVIDIA is on both sides too. It could be maybe an iron condor for those who are iron condor doers. They're great because you can use the same collateral in more than one place, right? If anybody sees anything on here they want us to look at, let me know. I've got written down Meta, Amazon, and SOXL. Those are the three that I'm going to have us look at. We'll go look at the chart. We'll go check it out over there. If you wanted something different, then let me know so we can take a look at it, okay? All righty. I wanted to share with you what we did last week. Was we went live on YouTube every morning last week, 9:30. We're going to be doing that from at this point. We're going to continue to do that. We're going to go live on YouTube in the morning. That's where we have our morning call. Now that morning call, we're doing it as a, as a gift to the world for another week. But usually that call is is inside the membership, right? Is inside the membership. I want to add this to the screen. So, but we're doing it for one more week. And that's because I found out, I think it was Thursday. I kept saying, go and sign up for the membership. And then I come to find out that I had turned it on, but I hadn't turned it all the way on. So it wasn't giving what it's supposed to have gave, because I hadn't turned it all the way on. But now on my YouTube page, if you haven't subscribed to the channel, please do so. By the way, if you haven't subscribed, please subscribe to the channel. Make sure you click the bell and everything so you can, see all the stuff we put out. But now, if you're interested in being a part of that morning call each day, then you can join the membership on my YouTube channel. There's 3 different levels. There's different things that are available at each level. The booster level, which is the top one that I offer, does allow you to be a part of the membership on YouTube, and you can see that morning call Monday through Friday. We're on from 9:30 to 10:15. It really depends on what's going on. And you can be a part of the morning call where we just kind of get ourselves prepped and ready for the morning. But I also do, I also have a full membership. The full membership includes that open call that I just mentioned, includes, we have topic-based trainings on Wednesday where we, go through something that's a topic. Like this past Wednesday, we redid our trading plans, or updated, or initiated. Some people didn't have a trading plan, so we made a trading plan. Some people who had one, they updated it. We do those once a week. This coming week, we're going to actually talk about the psychology of trading, because it's a whole lot to the psychologicals when we're trading. Trading is not just, do you push the button for the strategy, but how do you manage the cognitive or the mental, emotional pieces of a trade? And nobody can tell me that the emotional piece of trading is non-existent. Not a soul can tell me that, because I've seen it. I've seen people, you do a trade, it doesn't go well. The next time it comes time for you to push the button, something happens and you can't push the button. That's because something's on the inside of our emotions that has caused an issue, right? The psychologicals, the psychology of trading. Let me say it right. The psychology of trading. We're going to talk about that this coming Wednesday. That's the kind of stuff we do, topic based. And then on once a month, we do a strategy session where we learn different strategies, or we, lean in on a strategy we already have. We also have an exclusive Telegram group for all the traders who are with us. And that can all be found. Almost all my stuff can be found Educator2Trader.mv sites.app. All of my stuff, anything I talk to you about, can be found for the most part at my website, Educator2Trader.com. Okay, so I want to share with you something that we did in the yesterday. We did in the boot camp, right? We did the Chart Your Way to 100K boot camp yesterday, and if you want to hook up with us on that, why are you? I'm trying to find the screen I want. We did started a boot camp. We did charting basics yesterday, and we worked on candlesticks. Had a lot of good reports out of that yesterday, and things that were learned, and folks were quite grateful for the time that we spent and the information we got as it pertained to candlesticks, right? And how do you use the candlesticks? It's not just knowing the names of the different candlestick patterns, but how do you use that for your trading? So one of the things we did at the end yesterday was I had some graphs, some things we had graphed and charted to say, what do we do with this? What do we do when we see stuff like this? Is only one of them. We did about 3 or 4 yesterday. But this is SOXL. This is a current chart. I charted this Friday night, I think it was, Saturday morning. And this is the last pattern. This is the last of SOXL. So then we talked about what pattern would this then be? What kind of candlestick pattern would this be? We determined that it would be the morning star. And we talked about, if you're a buyer or a seller, how would you trade this as a buyer or a seller? Because charting technical analysis is not based on whether you're a seller or a buyer. You could be a buy and hold person on stocks. You can just do stocks. You can do options. You can do leaps. But all those people need charts. right? Everybody needs charts. And if you still want to join in to chart your way to 100K, you still got time to join us, right? You can still join us and look at the replay from yesterday and be ready for the next 3 weeks. You don't have to, miss out and wait for the next time. Hey, Lady T, you don't have to wait for the next time. You can go ahead and join up, watch the video from yesterday, the replay, and then be ready for next Saturday. We're doing it every Saturday in the month of January. Chart your way to 100K. So as a buyer, we decided that you could buy a call in the money and then you can exit. We talked about where would you exit? That was part of the discussion yesterday. When you buy calls, where do you exit? Or does your exit, is it money based? I make my $30, I'm out. I make 50%, I'm out. That was a good discussion yesterday. And then we talked about what if you're a seller? If you're an option seller, how would you trade this as a seller? And we came up with that you would do a put credit spread and then even continue through this gap, because as this gets into the gap, you may be able to trade it on up through the gap with several put credit spreads from week to week, depending on how much time it took to go through the gap. Now, this is SOXL. You can trade it as, again, you could buy a call. You could sell a put credit spread. There's a few other things you could do too, but those were the two things we came up with. And that's what we did yesterday. Some of what we did in our Chart Your Way to 100K boot camp. Next week, we're going to lean in on support and resistance, trends, volume, and I believe we're going to get to moving averages. I really hope we can get to moving averages. And then in week 3, we're going to talk about indicators. All those things I was mentioning, the RSI, the MACDs, the Bollingers, the Fibonacci's, we're going to talk indicators in week 3, which will be yesterday was the 6th, right? So 6 and 14 is 20, the 20th. And then the last week, we will talk about strategy-specific charting there. All right. Let's go and check out. We talked about our earnings. We talked about trades. Now let's go see if we can get ourselves to look at some stuff. Okay, we got a few of them we're going to look at here. I think we talked about ENPH, and ENPH was on the call credit spread list. Okay, if we look at these and you don't agree or you have some comments, please feel free to join in to the discussion that's in the YouTube comments. Join in. If you got questions, be sure to ask them. You got comments, you can make them. We can make this as interactive as possible, right? If we're looking at ENPH, we've got a gap here we're working with. I'm on the daily chart, I believe. Yes, I am. There's a gap here between 107.55 and 113.80 is a gap. Turns out this right here came down and boom, and then we had a long wick here. Anybody who was on yesterday know what this kind of thing looks like? What's this called? What this candle here is called? Let me see if I do I need to make it a little bigger so everybody can see. What is this little candle here called? Do we have a slide that explains what each means? Call credit spreads, put credit spreads. Yes, I do. I do. I don't have it right this second, but yes, I do. Okay. So anybody know what this is? Anybody got some candlestick people? I'll give you a minute. I don't know. You said send it to me. I don't know who me is. You need to give StreamYard. You need to give StreamYard your name, because at this point all I see you say, it just says Facebook user. Call credit spreads is bearish. Yes, I see a doji, a hammer. I think we might go a little bit more into the Delisha. Okay, that we might go a little bit more into the almost the hammer. I think I would lean more toward the hammer than the doji, but I do feel like there's a wick down here, that there's a little bit of that going on too. But what does the hammer usually indicate? Hammer usually indicates a turnabout, right? That there's going to be a turnabout. Whoop. Evening star. I don't know if I would see it as an evening star. Let me see if I can get this back to that. I think I'd put it in the doji and hammer category. Remember that gaps always provide support and resistance. So this is a buyer's gap, right? The bottom. Okay, can I get a what? Bottom of gap is support. Basically, there are buyers that are inside of here who got skipped over. Back in the middle of December, these buyers they were buying orders that were in here, and those buyers got skipped over. So if the price comes back in here, there probably will be some buying orders that will get picked up, and it will go up even higher. Go up, it'll come down and go whoop, and then go and whoop after this gap is filled. Sometimes gaps fill all the way through and then turn, or sometimes they come and turn just kind of a little bit at a time. All right. If we're looking at EMPH, I think I put it in as a call credit spread, though. It's on the list as a call credit spread, and that's probably because there's so much downward movement that was here. But let's look at what would be our resistance areas. So another gap at 120.37, between 120.37 and 122.62. This is a seller's gap, because the price jumped down. It's a seller's gap. And the top of seller's gap is resistance. Let's see if I can type looking around the camera. So above 120 might provide us a place, because we see there's been a trend going down, and you can tell it's trying to turn here, right? It's trying to turn around. There's a lot of buying pressure that went on with this long wick here trying to turn, and that very well could do just that. A reversal. Reverse. Yes, it can indicate a reversal. So a put credit spread may be a good move. I probably would go underneath the gap if we were going to do a put credit spread, if you could do that. But there's also, you have to look to it. I overlooked something. In the middle of this gap is some support right here. And this is from back on December the 6th. That's a bit of support right there. Let me put this here. This is support from 12.6. Okay, so we've got support here. When you've got some support, come on, you can move. We can move. Thank you. Support is right here. Okay, this is the buyer's gap. This whole thing is the buyer's gap. But okay, can you move? Thank you. There you go. This support here at 111, right from back here. Okay, so let's flip over to the trade screen and look at remember now, I also did a video, I don't think this one's been published yet, about using probability out of the money. Maybe we'll be able to publish that in a day or so. But 111 here is at 68% probability out of the money. 110 is 72%. Now, this is what it was Friday when the market closed. So we always wait and we see what happens on Monday, right? When the market opens, what do these numbers actually do? And we want a probability out of the money of at least 70%. 75 would be better. You know, if you are one who's a little more conservative, maybe you're going up to 80, but we want at least 75. So 110 is at the 70 mark. 110 puts us down in here. No, that's 107. 110 puts us here. 110 puts us here where my mouse is. Okay. Nothing wrong with the little extra support there. Let's look at that trade. If we did the 110 at this point, now, you know, you can't put a lot of weight on the money that you get, because it's not market. These are prices from Friday, and the market's going to need to open tomorrow for you to get some accurate numbers. But at this point, if you're looking at 110, 111 on a put credit spread, you're looking at taking in about $29. 20 something dollars. That probably won't be 29 on Monday, but that's a pretty good return for a one spread. One spread means you're going to leverage $100, subtract the amount you're going to take in premiums, right? So you're going to do that come, Monday morning, Tuesday. Wait till give it a minute. Let the all the new orders from overnight, let them settle down. Okay, so I'm looking at 110 for the put credit spread area, 110 as your sell leg, so like 109, 110. And I think what I put on the graphic is just the call credit spread side, but let's go look and see what that one looks like too, because we may be able to iron condor it as well. Looking over here, we got a 74 is at, what's that, 121, at the 121 strike price. And we talked about being the top of the gap. So probably be safer to go to 123 because we want to get on the other side of that gap. So it really would be better if we did 123. And that's an 80% probability out of the money. Let's switch over to vertical. If we're looking at 123, this one. Okay, that's going to pay about 13 cents. Okay. Possible. Let me make sure I'm possible. ENPH trade. We got what do we say? 123, 124. CCS. And when I say CCS, that's call credit spread. And then we had 109, 110 put credit spread. If you don't know what I'm talking about with spreads or whatever, we might need to find. I don't know if Jamie's on the call. Jamie, can you find the link for the credit spreads watch list from my YouTube channel and put that in the comments? I'm assuming Jamie is watching. That is an assumption. I can't. That's one of the drawbacks to doing YouTube is I can't tell who's here and who's not. When I'm on Zoom, I can see all the people. And if Jamie's not here, maybe Miss Deborah, I don't know if you're still listening. Maybe you can find that watch list for me, the credit spreads watch list, and put the comment in the chat so people can go and to the watch list and see about credit spreads. Okay, so that was ENPH. Who'd asked for that one? ENPH. Who was it that? Oh, there we go. Adrian. Adrian had asked for ENPH. Thank you. Hey. Thank you, Miss Deborah. Okay, so the next one on our list was going to be, what did we say? Amazon. Amazon. Do we have anybody who trades Amazon regularly here? Anybody who trades Amazon regularly? I really try to circle back to Amazon pretty steady because I like it's a decent mover. It's got decent premiums. It's still a one spread. I think after you get past $150, it switches over to 2.5 spread. But at the place where we are, one spread it is. And that one, Google, I like to trade Google as well. It's a one spread, offers some great opportunities. I didn't look at Google to put it on our list this week, but I may need to go and do that, put it on our list. Okay, so we do have a gap up here, gap here, not gap up. We have a gap here. Looks like Amazon is kind of in the same situation I was mentioning about the SPX, that it's kind of in the same place. It didn't open and close at the exact same place, but it's still showing some indecision. This wouldn't quite be a doji. It kind of gives you an indication that they're trying to make a move here too. Let's see about some support. I'm on the daily chart, which is where I generally hang out. We're moving. Come on, you can move. There we go. To this support over here based on this candle on December the 5th. We've got some support there. There's a seller's gap that is just above seller's gap is just above here. right? That seems really little, doesn't it? Seems like I need the writing to be bigger. Let's make it a 20. There you go. Seller's gap is in here. Support is down here at 143.56. You ask the question one more time, Emmanuel, because I don't quite understand what you're saying. Okay. You want to buy to gap close. Make it a little bit clearer for me so I can answer your question. Yeah, Lady T, if you're ready, jump into a one spread. It's a YouTube, Miss Deborah. It's a YouTube credit spreads watch list. If you go under my watch list, there's one that's credit spreads. You can grab the link to the watch list and put that into the chat. So if we're looking at Amazon, what could we possibly do? Well, we'd probably look at call credit spread above the gap. That's where you be safer there, because remember the top of the gap is resistance. And you can do a put credit spread underneath. So above the gap, well, we got 149 up here maybe, and then below is maybe 143. So 149 and 143. Let's go look over here and see what we see. If the probability out of the monies match up. He said 149 and 143. Well, 143 is a 69% probability out of the money. So if you wanted to do 143 or 142, that would be a good place. Let's change to vertical and see which one's going to offer us some change. 141, 142 at this point would pay $20. $20 in premiums. You leverage the other $80. That's a 20% return on your collateral. Yes, that's pretty good. 141, 142 on Amazon. That's what I had on my that I had written down too. And then we'd look at 148. Let's see what the 148 or 149. Come on. 148 or 149 over here is going to give us 148 gives a 71% probability out of the money, and 149 is 78.65. So 149 probably would be safer. Let's go look. We did say 149 would be good for us if we were, there we go. We'd collect $15, $18 off that. So this is what happens when you do that, right? Let me do a little quick look or quick explanation. What happens when you do this is you do the top trade. Let's say you do up here. I'm going to type something because I like to be able to see stuff, and I know I'm not the only one. If you do okay, 149, 150 at this point, these numbers are just today because the market is closed. You were going to collect $18 to collect $18 in premiums. Okay, you would do that. I think that's in premiums. That would be the call credit spread up here. But then you'd also do a, what did we say, 141, 142 put credit spread, collects, we said $20 in premiums. In this situation, we've collected a total. I'm not sure if y'all can see that. Hopefully you're looking on something bigger than your phone, because this will look really small if not. Come on, let me move you. There we go. You got a total of $38 you've collected in premiums for a one spread, right? You've collected a total. If we were doing this trade right this minute, you would collect $38 in premium, which means you would leverage the other $62, right? You collect 30 with the one spread. So you basically collect, what did I say, $38 in premiums. Use your buying power of $62. This is a 38% return on collateral. when I say all you leverage, I never want anybody's money to sound minimized, but what I'm saying is you've really, if you do both of these, you put $62, they're going to give you 38. They give you that money immediately. You've leveraged or put on the line $62. So max loss for this trade would be $62. Again, not minimizing anybody's money. $62 is still $62. Right? But in the overall scheme of things, when we look at the return on the $62 or the $100, you can see it's not a bad deal working with Amazon. And you can just pick one side. Maybe you can say, I don't want both sides of this. I only want one side. That was weird. I only want one side. I only want to do the call credit spread, or I only want to do the put credit spread. You don't have to do both. Even if you just do one, you're still going to collect $20 as a 20% return. $18 is an 18% return. If you say, I really just want to stay above this gap, I may feel safer there. Now this is trying to turn here. So it's maybe put credit spread. Maybe you want to go down one more step, but I'm just saying that you put them together. It's called an iron condor when you put the put credit spread and the call credit spread together. That's when it's an iron condor. Okay. In Amazon, one spread, and that's because the difference between the strikes is one. That's how you get the word or the thing for one spread. The difference between each strike is a one. Okay, let's look at Meta. Okay, no issues, Miss Deborah. It's okay. It's all right, dear. I'll find it. I know exactly where to go look, which probably make it easier to find it. Miss Deborah said, I'm looking hard. I can't find what you're talking about. I don't know what you're talking about. Thank you, honey. Appreciate it. Okay, so we've got a support here, the place where Meta turned around a couple days ago, right? It stopped here on 1-3, and it started to go up on the 4th. And then on Friday, it went up even some more. There is a gap here that it has now gotten into or going into, right? It closed inside of this gap. This is a seller's gap. So there's sellers that are in here. We're looking here. Some folks who are on the line. Jamie said, I don't see it either. Lord. I don't, I'm saying I'm going to go find it. I might not be able to find it either. Y'all look here. Tell me what kind of trade do we see on the screen for Meta? What kind of trade do we see on what could possibly be some Meta trades? And let's talk about, of course, I'm a seller's coach, and that's what I'm going to always coach you as a seller. But what do you see even if you're a buyer? Do you see anything as a buyer? Because I don't know. Buying is a lot more, to me, more intricate and more involved. I like selling, seems to be a lot more straightforward. You pick a strike, you just want the price to not go past your strike. You find a place where you get beyond support and resistance. That's all you want there. You want it to be beyond support and resistance. And then you let the time pass. Time decay is our friend. We don't have to buy time. You get paid to trade. These are all the pluses for being a seller. You get paid to trade. You just need the stock to stay between your strikes or away from your strike. Yeah. I think I may have found what we're looking for. And what I'll do is I'll bring us all here. That way everybody can see what I'm looking at too. I hope you can see when you go to my page. I don't know if you can see this the same way I can see it. That may be the weird thing. I can look at YouTube as the user, and I don't know if it looks the same as when you look at it as the partaker. Does it look the same when you're the partaker? I don't know if it does. Okay, what do we come with? I switched off, so I need to be able to go look at the screen, see what y'all typed in. Let us see it. Okay, gotcha. Yeah, hey Jamie. The put credit spread. Yep, I see put credit spread. I see a put credit spread. Could potentially, depending on how you're feeling, this is resistance up here with Meta. So because it's kind of hanging in the middle, you could also potentially do a call credit spread. I think Meta is on the list for both. Could potentially do a call credit spread. Credit spread above 360. Yep, at 360 or above, you could do that. And then we can do maybe here we go, a put credit spread below, what's this, 344? At 344 or below. Let's go look at we're going to go look at what the numbers look like. 360 and 344. Put us on single. Now this is going to be a 2.5 spread. Notice the difference between these strikes is 2.5. This is not a 1 spread anymore. This is a 2.5 spread, right? So what did we say? 340. I think we probably got to go below 344. So 342.5 and then 360 or above. So let's go. 342.5 is going to be the put credit spread area. That strike is 78% probability out of the money. Probably a good one, 342.5. And we said 360, which that's a 74% probability out of the money. Let's switch over, see what kind of money we talking about. 342.5 is going to pay $40. Okay. So here we go. 342.5. Let me type in here that we are talking about Meta. Okay, 342.5 put credit spread is going to pay, what did we say, $40? And then we were looking at 362.5. Now, what I'm talking about is just for this week. That's $54. And then we said 362.5 is going to pay, what did I say, $54? That's what, $94, $94 in premiums with, what's that, about $150 in collateral. Those lines are small for y'all to see them. I'm sure y'all, it's hard to see all them little bitty lines. Okay. 342.5 put credit spread, $40, and the other one's going to be $54. Gives you $94 in premiums. And if you're leveraging the 250, if you don't count off the way, I had a calculator that was close by. Where did it go? Make sure that we do. Oh, there it is. Do the math, baby. We the math teacher, right? $94 divided by, making it around 150. Nope, that ain't right. $94, that's way too high. Divided by the 250 spread. That's about a 37% return on if you did an iron condor. Of course, you could just do one side. You don't have to do both sides. You can do one side, right? You can do one side. That's a 37% ROC. Some people like to go out further in time because these are all 1 week trades. So we like to go out a little bit further in time. That's going to give you a different level of premiums. And you may want to also look to see that you get strike prices that suit that date better. Because when I'm looking at the probability out of the money, notice I'm looking at probability out of the money for January the 12th. Right? If you want to go out further in time, you need to go to January the 19th or 26th, whatever you're picking. You're going to want to see these probability out of the money, those places for that date. All right. You want to do that for that day. Right. All right. Let me share with you real quick what we got for YouTube. Okay, let's remove that. And then we're going to share the screen. Present. What are you doing? Okay, share screen. Yes. Screen one. Yes, allow, and then we're gonna go to YouTube. When I'm on YouTube, do you all see where it says playlist on your YouTube? See, I'm on my channel, so I'm thinking this should look like what it looks like to you. But I don't know for sure. But if you're under playlists here, you got home videos, shorts, all that stuff, and playlists. Under playlists, there's one over here to the right called credit spreads. Over here. See where it says credit spreads? There's several different playlists here. So whatever you're thinking you want to look at, you can find different stuff. So whoever was on, I think Delisha might have asked if you're wanting to look at some credit spread stuff. This is where you can find different credit spreads, things there. It won't let me. I need to be able to grab the link that is going to start playing. Don't start playing. It's going to do that. That's what YouTube does. It just opens up and starts to play. I wanted to grab the share link for the playlist. Oh, there's a share right here. If I grab share right here, maybe I can grab the link. Yep. Copy. And then I can put that into our comments.
What if you could make a couple extra $1,000 a month using one little app?
Thank you. Thank you, YouTube. YouTube, thank you. Okay. We covered the market from last week. We covered thoughts and ideas this coming week. We looked at the meetings. We looked at earnings coming up this week. We looked at trade ideas. If you haven't subscribed to the channel, please do so. If you're not a member of the Facebook group, please go find us on Facebook, Educator2Trader in the groups area. If you need to email me, I'm Arlissa at Educator2Trader.com. Follow me in all the social media areas. Be sure to like and subscribe to the channel. Remember, tomorrow morning we will be on live. It'll probably be about 9:30, maybe a little bit more, because I'm going back into the classroom tomorrow, and I finished teaching. My class is supposed to end at 9:40, but generally class gets out a little early, so I'll be on live on YouTube in the morning with our morning call. All right. Again, if you want to join us with that, you saw all that. The one, Chart Your Way to 100K is still open. If that's something you're interested in doing, be sure to go ahead and register for that so you can get the replay and be all in line for this coming Saturday. If you want to be a part of our full membership where you get all the pieces, you get the Wednesday nights, the Saturday, and you get the exclusive Telegram, then go to my website, Educator2Trader.com, and avail yourself to that. Okay. I am going to go and have some dinner because I am hungry. Okay. In our community, we definitely do two things here. Always do two things. And that is that we stay green and we get this money. Thank you, DH. I appreciate that so much. Thanks for hanging out with me. Thanks for enduring all of my antics. All right. I want to see you all in the morning with us in the morning call. It is free to all. All right. I'll see you all there in the morning. All right. I want everybody to have a good evening. Enjoy the rest of your night. And I will see you all in the morning. All right. Hasta luego. Goodbye. Arrivederci. My feet are the same. Bye, everyone.